Hey everybody, happy Tuesday. It is Octa on-chain technical analysis, and this is going to be called Weathering the Storm. I'm going to talk about kind of the macro outlook, the ugly, the bad, then the good. See if we can see any signs of life, signs of light out there at all. When I started this video, Bitcoin is at 29,500. So let's see if we go up from here. Again, big move over the last hour or so. So let's jump in. Let me make sure everything is working. Busy day. It is working. Sorry. Yeah, good. Let's jump in. Math, money, and freedom. And of course, disclaimer, this is edutainment. And we will pack in hopefully about 30 charts in a very short window of time. The story, well, let's just jump into the big picture today is how we weather the storm, what we see. So let's talk about the State of the Union. And it's not a pretty picture. So as I said a couple of times over the last few weeks, recession is here. Everybody's going to talk about recession. Every time you pick up a newspaper, read it, they talk about, recession is highly probable. And I think we're already deep in it. Stagflation is next. And unemployment will rise, unfortunately. Inflation is out of control. Consumer confidence is gone. Housing is out of reach. Quantitative tightening threatens a debt crisis because there's so much debt out there. We'll talk more about that today as well in today's show. Wage inflation is here to stay, but it lags. People are not getting the type of wage increase they need to increase their purchasing power. The market, stock market, every market all across the board is very fearful of a Fed crash landing. And demand destruction is here, which could contain inflation. And we'll talk more about that too in a minute. And the 10-year and 20-year yields forecast future inflation, and they've come off. We'll show you some charts on that too. The question is, everybody, how long will this suffer continue for? We're seeing some signs of bottoming, covered that before, but again, there's so much uncertainty, so much nervousness, so much negativity. But remember, once the Fed can get inflation under control, and start stopping the rate hikes, maybe stopping the quantitative tightening, the market will go up very fast. And everybody knows that. It's all about timing that. So how do you prepare? And we'll talk more about that as well going forward. So today, because there's so much ugly news, we're going to start with the ugly first. We always do that. When there's a predominance of good news, we start with the good first. And again, let's just jump into the ugly. So first of all, 20 trillion in net worth disappeared so far in 2022. This is from Zero Hedge. And the S&P 500 entering bear market territory, sliding from its 20% all-time high, just basically wiped 20 trillion in household income off the slate. A lot of people are blaming the US president, and this loss is far greater than under any other US president in history. Not getting political, just pointing out a fact of that dollar value. But remember, everything has gone up in value. A lot of money was printed as well. And a lot of that money printing began before this fellow even stepped into office. But basically here, this is a big hit. Even the multi-billionaires, the richest people on earth, they lost a huge chunk. I think, I can't remember the exact number, but I think Elon Musk lost $140 billion, something crazy like that. Anyway, just so far this year. In other interesting, weird, bad news, this is from MarketWatch. Big thank you to Sanjay for sharing it with me this morning, very early. And this is, will the real inflation rate please stand up? So this shows the headline CPI number. And of course, it always focuses on its 12-month rate of change. We spoke about that many, many times. But if you focus on the monthly rate of change, as shown in the chart here, it becomes rapidly apparent how much inflation dropped from March to April. So is that good news? Not really. So remember, until these spikes drop out of the calculation, the headline inflation number will remain stubbornly high. Not because the Federal Reserve is doing a bad job fighting inflation, but it's because of simple math. And net, we need to shake out the June and October big high numbers of 2021 and the big high number in March of 2022. So until those things are shaken out of the equation, we still could be facing some pretty high inflation. Now, remember, in some good news, the Fed is going to cook the books. They've already tweaked real estate, housing, so you don't see the true impact of housing on the inflation number. And next up is cars. And who knows what's after that, travel, medical, education. But they'll make it come down. Remember, if you go back to the previous slide real quick, a lot of people are hurting right now. A lot of people have lost a lot of money, and that makes the politicians in power very unpopular. So they need to fix that. So maybe there's a little bit of hope that they will try to do that. Now let's talk about some other news. U.S. spending will grind to a halt. This is, as Bloomberg said, the potential imminent collapse. Remember, the key to this chart here is to show you how much people have been pulling money from their home equity loans to fund their lives. And with the banks shutting down their lending, and basically the banks only lend out money now to people that don't need money, there's going to be a big hit to spending. So that is going to put a big kibosh on exactly how much people will spend out there in the marketplace, and that'll have an impact on recession and, of course, slow GDP growth. All bad news. Now, Barrons came out with this article. New home sales falls sharply. A recession alarm is sounded. Again, you pick up any newspaper, you'll see the term recession in there. Now, this talked about the last month decline in home sales, 16.6% or 17%. And that is astonishing in just 1 month. And a lot of people expect this to maybe continue. Remember, mortgage rates have nearly doubled, and that is making a lot of properties out of reach, and the prices haven't come down to reflect that. And last month, so you have a double whammy. You've got less credit and high prices still, and it's almost impossible to get mortgage rates. So last month, I think the median sales price of a new home was about $450,000, which is still 20% higher than a year ago. And the average weekly rate in the 30-year has doubled. It's way over 5% right now, from about 2.5%, 2.75% late last year. And this is also the first time I think mortgage rates have gone above 5% in over 11 years. So it has been a very fast changing macro environment. Proof that housing is also out of reach. This is from Charlie Belillo. And it shows the simple little chart of the median US new home price divided by the median US household income. And you can see it's now at 6.7%, which is the highest ever on record. So I feel bad for those that are trying to buy their first home right now. And it is just literally becoming out of reach between those combination of factors. This is all bad. But remember, housing is a huge component of the CPI. Even though the number is cooked, it will have a deflationary effect as we go forward. Now, lending market liquidations and some crypto information from the block dashboard. Obviously, the UST pegging and the Luna disappearance resulted in about $1 billion of anchor liquidations over 3 days. And Luna and Avalanche mainly collateralized the liquidated loans. But bugs in the anchor protocol mechanism contributed to this amount, which unfortunately caught people out. See how this kind of ties into people borrowing. I hope they were not borrowing on these platforms to buy real estate, because that will put them in an awful pickle and will bring about some foreclosures and things like that, which will further worsen the real estate situation, which is yet to really truly hit. Now, the previous record volume of DeFi liquidations was about 0.7 billion. And that was back last year when Aave had to repay, I think, $360 million of debt to the protocol. So that was worst on record. So we've gone from the ugly news. Now we'll talk a little bit about the bad news. So things are getting a little bit better, but still a lot of ugly. So fear and greed is still at 12. It's still hovering down here. And we had a hefty and brutal to the start of May. Now, the market has taken a welcome breather as Bitcoin has stabilized. In fact, even as we look at it now, Bitcoin is up. Let me calculate this exactly. $70 since I began. Not much, but we might hit, let me see, check the exact number, 29.6 in a few minutes. Now, the fear and greed did touch 8, which is an all-time record on May 17th, or it's either all-time record or the lowest recorded for the second time. And we'll see. This fear and greed index actually came about in early Feb 2018, I think. And that's where we are right now. So this is historically a good time to buy, but there's so much nervousness that people just aren't rushing out and buying. Now let's talk about this. This is the money flow into digital assets. And after a record week year to date last year with a huge inflow of nearly $300 million into Bitcoin, this week, there was drainage of about, let me calculate that, approximately about $140 million, give or take. And the total assets under management right now are at 38 billion, and this is the lowest point since July 2021. So money has been drained out of the whole system, and that's of course impacts price. Let's look at where we are in terms of the details. Here you see the weekly flow, 153 million. Out of that, 140 million went out of Bitcoin after pulling in 300 last week. So it's kind of in and out. I think last week was about 307 million into Bitcoin. But if you look at some of the other areas, you see minor inflows into a couple of altcoins, notably Solana, Cardano, Polkadot, all pulling in some money. Even Litecoin pulled in $100,000. So again, that's something, but it shows you that Ethereum is still bleeding, or flat in this case for the week. Year to date, down about 240 for Ethereum, which is huge, but money is trickling back into some of the alts. So wonder what that means for dominance. We'll check out in a second. Now, speaking of Ethereum, there was a lot of talk as well about Ethereum burn is not as high as expected, as the chain is not being used as much as expected. And of course, the protocol here is designed to burn as more transactions flow through the chain, but it's not. So basically, Ethereum, everybody expected Ethereum to be deflationary as of March 2022. That didn't happen at all. We hit, I think, 2 or 3 days or so where it was deflationary, but since then it's inflationary to the tune of about 0.5%. So Ethereum is being issued and hitting the market, and that's because the chain is not being used. So let's talk about this one. This is the correlation between, or should I say the inverse correlation between the 2-year yield and Bitcoin price. This is from Lycion. Now you can see here as the 2-year yield goes up, Bitcoin price goes down. The 2-year yield is that yellow line, and Bitcoin price is the dark blue line. And you can see, especially since approximately, what would that be, November, since the all-time high, November 2021 to today, there has been an inverse correlation. But the good news is, just like the dollar index and the 10-year and everything else, they seem to be topping out, which is a little bit of positivity. Still bad. Now let's talk about the ECB and Christine Lagarde. Their interest rates are moving back to zero. Now the inflation in Europe is 8%, but probably a lot higher than that, probably 15%. There's threats of them putting a full embargo on Russian oil in place. But here it's kind of interesting. Interest rates are minus 0.5% today, and they're probably going to go to zero. But inflation is skyrocketing because of energy and food supply issues and everything else. So we'll see. I think Christine Lagarde said as well in Davos that they'll be in a position to exit negative interest rates by the end of the third quarter. So plan for this, everybody. In Europe, there might come a day soon where you can deposit money in a bank and they won't take money from you. It's just unheard of to think of. Anyway, let's talk about some good news. Woohoo! Got Clint Eastwood here sharing a few good words. So let's see. Ray Dalio in Davos. He warns of 1930s style currency devaluation. And he says Bitcoin's part of his portfolio. Of course, everybody's like, well, how much exactly? He said, well, a small amount. But he's been a bit of a Bitcoin bull for quite some time, talking about being digital gold. And what he means, though, he always says cash is trash. That's kind of his moniker. And what he means by that is, I think you said today, all currencies in relationship to the euro, in relationship to the yen, in relationship to other fiat currencies, like in the 1930s, will be currencies that will go down in relationship to the goods and services that they have to buy. Basically, they're going to debase everybody. We all know that that's happening. But for him to get out there and pound the table in Davos and say this kind of live is like pointing his finger at the euro and everything else. Like, the money printing is just unsustainable. There's too much fiat slushing around in the system, and it's going to debase itself. It's just mathematics. We seem to be talking a lot about math today. Anyway, so he believes, he mentioned a question was kind of interesting. He said, what is the type of money that can move between countries that's a medium of exchange and a store of wealth? Boom. He's basically pointing to Bitcoin and it being part of his portfolio. So he loves the narrative. He says he does get a bit nervous if Bitcoin is to exceed $500,000 in price, because then the governments may crack down. But anyway, in other good news, well, it depends if you hold alts or not, but Bitcoin dominance is kind of dropping a little bit off the high. We hit nearly 46%, and now it's hovering around, I can't see the exact number, about 48.94% or something like that. But you can see here, we always stay between that floor and that roof as we go forward. There was talk of alts going to hell in a handbasket, Bitcoin dominance going to 70%. I don't buy into that narrative. I do believe 98% of cryptos are garbage. But if you look at the top concentration of the top market cap cryptos, altcoins, they have fundamental value. So I think they're not going away. And again, it all goes back to the whole flipping conversation. Could ETH one day flip Bitcoin or some other ETH killer? Who knows? Now let's talk about the other thing I hinted at earlier. The 10-year yield is dropping. If you see the chart here, there's a couple of interesting things. I have the blue line as a 200-day moving average. The red line is a 50-day moving average. And you can see the actual 10-year yield dropping. And actually, it wicked down to the 50-day moving average, which is super interesting. But it's come off the highs, which is good. And remember, when you look at the 10-year yield, some people see that as a forecast of constant inflation in the future. So under 3% is a good sign. So that means the long-term investors believe inflation will come back under control eventually. Let's talk a bit about the global share of the hash rate. And the reason I show that is for those countries who are worried about there being a Bitcoin ban. Obviously, the more Bitcoin miners there are in a country, the harder it is to ban them. Taking case in point is China. China banned Bitcoin mining, but they failed actually to ban it. And then there's a lot of talk about that 21% hash rate coming from China. And although political power is very centralized in China, the country's vast size makes it very difficult to implement a ban on Bitcoin mining and binding. That should be a new word, binding. But often in China, mining is done in very remote locations where energy is available and people can't monitor or control things. So all you need is an IP address. So that's super interesting to watch. In other notables, you can see here, actually from this chart, you've got Kazakhstan in third place. Obviously, a lot of the Chinese miners, that was the closest country to go to, but there's talk of Kazakhstan having problems with their grid, so they are putting a dampener on some of the mining that can happen there. Canada in fourth place and Russia in fifth place. But US has exploded on the scene. They've gone from 10% 2 years ago to nearly 40% today, which is stunning. So in other news, let's talk about the winner emerging from the crypto crash of UST is USDC. Obviously, we've hinted at that, a flight to safety, getting out of riskier coins like USDT, Tether, and moving into USDC. And that's what happened. I hope somebody didn't mind. We added a little USDC symbol on that vehicle down there for you all to see. But as everything else kind of falls apart, USDC has emerged a winner. Tether market cap has decreased and USD has all the benefit of that. So remember, safety first, especially in this market. In other news, Brave is expanding the utility of its crypto rewards token, the basic attention token, for those who don't know it or don't use the Brave browser. And Brave users earn BAT by opting into advertisements while browsing. And I think they have about 60 million active users, which is substantial. But the beauty of this is this BAT token, which is EVM compatible, can be wrapped and used as an SPL token on Solana and sent through Solana's wormhole bridge, which is up and running, of course. Now, in the future, BAT holders will also be able to use the token to buy and sell NFTs on the Solana marketplace, Magic Eden, I think it's called. So more adoption news for Solana, which is great, exposing the chain to 55 million people. Now let's look at a couple of charts in this week's charts. Things are still very risky out there. Things are still getting crushed, but let's talk about Google and everything else. Now, first of all, a little perspective, because a lot of talk about people in Davos being bullish on the dollar. So Fed plans to keep interest rates, etc., but there's a lot, everybody's saying everything's going to be fine, just as George Soros, by the way. But I just want to share, as people in Davos are talking about, hey, the dollar is all strong and almighty, let's look at a chart of US dollar to Bitcoin. It's down 93% in 5 years. So if that was a stock, you would not be holding it. If that was a token, you would not be holding it. But as a currency, it's very, very strong. Again, perspective. Yes, Bitcoin is weak right now. Yes, Bitcoin has had a tough 12 months, but you zoom out a little bit more, you will see the real truth. Now let's talk about a couple of other things. Bitcoin option bets for this from Glassnode, from Deribit as of December 2022. You can see here big bets. We have $64 million in Deribit bet on $100,000 Bitcoin by December. $101 million on an $80,000 Bitcoin by December, and $70,000, about $78 million on a $70,000 Bitcoin, and a couple of put bets, $30,000 Bitcoin, $34 million, which is pretty much a little bit higher than where we are right now, and $61 million on a 25K Bitcoin. Remember, people place these bets to protect their bags as well, buying insurance, but not a lot of put activity compared to the bullish activity onto the far right. And after I covered Scott Menard yesterday, he said he doesn't expect any Bitcoin rally until 2024, until the halving. But these people betting money here think differently. Let's look at, however, the short-term outlook for July. You can see here some calls, about $33 million on 40K, which is a small bump, but a lot of very negative bets. You've got $29 million on a $15,000 Bitcoin, $60 million on a $20,000 Bitcoin, and $76 million on a $25,000 Bitcoin. And of course, $30 million on where we are right now as insurance. So this is extremely negative. Very, very concerning that people do expect another wick down or another double bottom. Remember, if we go back to 25.4, 25.6, whatever it was, that's when they can still cash out these positions and make money. But their time value is expiring fast. So watch that, everybody. So expect bumpiness for the next, I say, 8 to 12 weeks. Once we get through August, get some clarity from the Fed, because the Fed has handcuffs on us right now, then we'll be able to bounce and move forward. Now let's talk about some historical numbers as well. This was super interesting, again from Glassnode. The Bitcoin compound annual growth rate between January 2020 is 124%. And today it's 41%, depending on the point at which you measure the compound annual growth of Bitcoin. So yes, even going back over that long period of time, it is still a very, very impressive compound annual growth rate. Now let's look at Ethereum, see how it compares for giggles. The compound annual growth rate since January 2020 for Ethereum is 220%, and as of today, 34%. So it's very interesting to see how close they are between Bitcoin. Obviously, Ethereum multiplied a lot faster since January 2020, but the CAGR as of today is very similar, 41% versus 34%. That was worth pointing out. So let's look at some Bitcoin RSI here. You can see the RSI is actually under the C19 March 2020 level. And that is also quite astonishing for it to be so low. And last time it had lower RSIs was basically late summer 2018. And also way, way back in 2015. So again, this is a very historically low RSI level for Bitcoin. Let's look at Google RSI. Yes, it is also under the C19 March 2020 level, but the price is over 2 times higher. So, I personally was buying Google Leap's $1,000 strike back in March and a few others. But again, a couple of years later, things are extremely weak. And remember, it still has a 24 stock split, but it got hammered today because everybody's very worried about Snapchat. Snapchat issued a warning that they're worried about their future earnings, and that brings down all marketing-related companies, advertising-related companies, which is like things like Facebook, Twitter, etc. And that might mean Elon Musk can buy Twitter very, very cheap. So listen, net, everybody, weather the storm. It's going to be rough, bumpy seatbelts the next 8 weeks, 10 weeks, maybe 12 weeks. Hopefully the Fed will be done by then. Until they are finished with their hiking, as I say, I don't see them doing more than 100 basis points more, 2 times 50. And once they stop, and maybe they'll stop because they'll see really bad recessionary numbers or some other monkey virus thing floating around to cause enough fear to really put the brakes in the economy, to destroy demand, then they can get back to their usual way of money printing and quantitative easing. So we'll see. That's what we're hoping. But in the meantime, we got to get through this storm. and then be ready for when the horses start to run again. Okay. Thank you, everybody. I'll see you all tomorrow. Hopefully we can crack the code on DCA and steroids. Thanks, everybody. Have a good night.